A new Bankrate survey finds 26% of Americans prefer to save cash over other long-term investments. That's compared to 23% who choose real estate.
16% pick gold and other precious metals. Only 14% favor the stocks, and 8% go with bonds. Jim Ellis is the assistant managing editor at Bloomberg Businessweek and joins us at the table. Hello, good to see you again, Jim Ellis.
Thank you. Good morning.
So were you surprised that the number was so low with the people who were investing in stocks?
I was surprised in the sense that we've had such low rates on cash in the last 4 years that you would think that most people would say, I've got to get higher rates. But so many people were sort of shocked by the crash. They are sort of shell-shocked now. They don't want to take any risk. And in the long haul, that's gonna hurt them.
Because once you've been burned, isn't it hard to jump back in?
It's hard to jump back in, but so many people are now facing a time in life when they're going to have to live off savings if they're going to have to face up to this. I think a lot of people forget that boomers are such a huge percentage of the retirement economy now. Right now, 10,000 people turn 65 every day. I mean, that's a huge number. So this isn't an academic exercise. This is a real world, problem that a lot of people have to face up to, even if they don't want to.
And so what might cause them to rethink?
Well, what will have to cause them to rethink is simply that they're going to sort of have a big drop off in income if they don't look for ways to raise the income that they can get on their savings.
And so once they make that decision, what's the next decision?
The next decision they have to do is, basically, what can they stomach? They're going to have to stomach equities. It's just the question of how many equities can they put in. Equities from a long-term return have given you about a 7% return, 7, 8, depends on whose study you want to look at. That's really important because 7% over 10 years doubles your money. If you do the same thing with today's sort of savings rates, which are maybe 0.1, 0.2%, it would take you 60 years, 70 years to do exactly the same thing.
But is it better to invest yourself or invest with a stockbroker or, in fact, to put it in some kind of fund where there's smarter money management?
It's probably best to put it in some sort of fund, not so much because there's smarter management, but because you also get diversification.
Right.
People make a lot of mistakes throwing all their eggs in one basket, and the older you get especially, you can't take that kind of risk. You want to sort of spread it across a lot of different investments and also possibly several asset classes.
But I've heard so many people say cash is king. Do you have a figure in mind that if you have X amount of dollars in cash, that you really should invest it?
It should probably be more a percentage of your operating expenses, your family operating expenses. I think that if you've got 3-4 months of total cash and you don't really need it, you own your home, you have no sort of large things out there, no huge house notes, you could probably say 3 months, 4 months, that's enough cash. The rest of it should be actually getting you more in interest.
And in terms of retirement? Early retirement.
Early retirement is, I hate to say it because I would love to early retire, but early retirement is probably a mistake. There are so many benefits to continuing to work. The biggest one being for a lot of people, particularly moderate income people who are going to depend on Social Security to give them income. If you wait until 70 to take your Social Security, you will get 76% more in monthly payments than if you retire at 62.
Jim, if you retire, what would you do?
I would watch you every morning.
You're a smart man, Jim Ellis.
There's a reason he's a big deal over there, isn't it?
We knew you were a genius. Thank you, sir, for coming. Thanks.